This is a 5-step checklist to help you identify a real breakout versus a fakeout, so you don't get caught in another trap. Let's go. Welcome back to Stock Trader School, from rookie to Rainmaker, and this is Tactical Tuesdays. This is a show where we discuss everything day trading to keep you profitable. We're gonna jump right into today's topic, which is all about breakouts versus fakeouts. You waited for the breakout, it popped and then reversed. Here's why. So we're looking at S. Here, we had a nice little uptrend playing out. We get this huge green candle wick here, which is an extremely bullish sign. It shows buyers are aggressively entering on this move. And then what happens? Reversal. If you entered along on this green candle, you got smoked. So how do we know if a breakout is valid or not? There are 3 main things that you want to look for when determining if a breakout is valid or not. The first thing you want to look for is some type of volume surge. This is not a raw volume. This is not a tick volume. This is volume in context with price action, a volume spike when price falls significantly. That's how you determine volume surge. It doesn't have to be raw numbers. The second thing you want to look for is retest confirmation. So once a high gets broken, you want it to come back down and retest that level before continuing on in the direction it was going. So we want to see that retest happen. It could be very quick. It could be like this. Same thing when price breaks lower. We want to see it retest that low very quickly, not immediately, but quickly. And the third thing is follow through candles. So once you have your volume surge, once you have your retest confirmation, you need to see follow through. In order for this to be a valid breakout, the next candle needs to close above that high, otherwise, it's a fake out. So let me ask you a question. Is this a valid breakout? Why or why not? Think about the 3 steps. Let me know in the comments below. We had a huge volume spike. Check. We had a retest. Check. Did we have a follow-through candle? That's a no. So this is not a valid breakout. This is a fake out. If you want to make sure that you're protected against these fakeouts, then you want to use a tight stop loss right at the breakout level. So even though this is a fakeout, you would have gotten out on this trade because your stop loss is right there. But if this was a valid breakout, you would have let that trade run. A lot of people will say, hey, if it's a fakeout, just ignore it. Don't enter at all. Well, if you only enter on confirmed breakouts, then you're missing out on a ton of good trades. You're getting left on the sidelines while everyone else enters on those breakouts, and you're not taking advantage of them. You're being too safe. You're letting fear control your actions instead of letting your analysis control your actions. So this is how pros find the difference between a real breakout and a fake out. It's not 50-50ths. There's always clues telling you which way it's gonna go. You just have to know what those clues are. Now we're gonna go over 5 tips that tell you whether. Here's tip number 1 is to look for low volume. If a breakout comes on low volume, chances are it's a fake out. Volume tells us how many people are interested in buying or selling something. If nobody cares, if nobody's interested, well then price isn't gonna move much, it's gonna consolidate. If we have a breakout on low volume, chances are it's a fake out because not a lot of people care. Tip number 2 is to look for price rejection. So this is a very strong uptrend. We have a breakout, great, let's enter long. But then what happens? Price comes back down, hits that level, and reverses. If this wasn't a fake out, why would price reverse? Because there's sellers at this level. They weren't buyers, they were sellers. They entered their shorts on this breakout and then got stopped out. But the fact that price came back and hit this level, it shows us they're sellers here. If this was a real breakout, they wouldn't be sellers, they'd be buyers, so we can assume this is a fake out. Tip number 3 is to look for big wicks. This works for both directions. If we have a huge lower wick, that means aggressive selling. If we have a huge upper wick, that means aggressive buying. So if you're looking for a short, you want to see aggressive selling. So you would wait for a long wick on the downside. This is a fake out. You don't enter. You wait for the real breakout. Same thing when you're looking for a long. You don't want to see aggressive buying. You want to see a huge candle wick on the top. That's aggressive buying. Wait for the real breakout. Enter on that one. Don't force it. Tip number 4 is to look for no retest. So if you remember earlier, we talked about how you want to see a retest before you enter. So you want to see that new swing low retested. This is a fake out. We never saw that retest. If we did, we would have seen it like this. Then we could have entered our trade. As it is, it's a fake out. Tip number 5 is my favorite. It's a combination of everything we've talked about. You want to look for low volume, price rejection, big wicks, no retest. If you see that, it's a fake out, don't enter. Wait for the next move. So let me ask you a question. Is this a valid breakout or a fake out? Think about the 5 tips we just went over. Let me know in the comments below. First off, we had a very large candle wick. Check, it was on the upside, though. So that's not what we're looking for. It's not aggressive buying. This would have been a valid breakout if we were looking for a short. Second, we had a retest. Check. Third, volume. Was this a volume spike? No. Fourth, was there price rejection at this level? Yes, so this is a fake out. You wouldn't have entered on this one. Now we just went over 5 tips to help you spot a fake out, but how do you actually trade these? How do you manage them? Let me go over to quick tips with you. The first thing is, when you do enter a long or a short on a breakout, use tight risk at that breakout level. Make sure you're protecting yourself. You never know if it's gonna be a fake out or not. So use tight risk at that breakout level. Plan for re-entry on the pullback. What I mean by that is when it pulls back to the previous level, that's your opportunity to get back in. Say you entered a long on this breakout, you use tight risk. Well, now price has pulled back to this level. Enter again. Now you have a 1 to 2 risk to reward setup. It's the perfect setup. This is what you want to be looking for. So you're probably saying, John, how do I know if it's gonna hit that level? Well, you don't know. You can't know. Nobody can know. Nobody knows the future. All you can do is plan for it. So if you just plan for this scenario, when it happens, take advantage of it. That's half the battle. The other half is finding breakouts, knowing which ones are fake and which ones aren't. Thank you so much for watching. I hope you enjoyed the video. We have a lot more coming your way. Make sure you subscribe and turn your notifications on so you don't miss out on any future uploads.